What if I told you that every breakfast, every training bottle, and every free walk in the countryside depends on a trade currently taking place? Competition for limited and tangible resources has begun among the world's leading elites. Today, land is the first choice for any billionaire when a meaningful conversation arises. Moreover, this tangible resource is more valuable in the long term than gold and oil combined. Feeding all nations would be impossible without a detailed understanding of plant physiology, as history has shown. Botanists and physiologists have spent decades working on two main research areas that transformed agriculture and crop production. In detailed plant physiology, reconstructing a comprehensive overview of plant life was necessary to design effective care strategies and meet the needs of each species. Research in general plant physiology took a holistic view of chemical and physical processes in the plant world. The information gained from each subdiscipline, considering historical context, helped shape the conditions for effective cultivation. Agricultural chemists developed pathways to improve plant resistance and promote earlier maturation. Nevertheless, natural factors such as extreme weather caused by climate change and human activities like intensive mechanization, monocropping, or excessive fertilization continue to deplete soil quality. In comparison, medieval farming techniques, though lacking pesticides, involved growing specific plants for soil enrichment, using core aerators, and building gradual hills to direct rainwater flow. Water is essential for every living creature, and any water crisis makes this resource even more precious than gold and oil. Only about 0.65% of the world's water is suitable for uses ranging from cooling data centers to hydrating the global population and animals. According to World Bank, by 2050, water demand is expected to increase by 20 to 30%, which is why water rights are so important when acquiring land. Technology does offer some limited solutions. Laser technology can influence cloud formation, and cloud seeding techniques can produce snow or protect vineyards through hail suppression. Nothing outweighs fundamental needs: food, water, energy, and land when planning a long-term strategy. Water desalination requires significant energy and harms the environment. High-quality farmland is limited. Energy is indispensable for technology and business. The profitability of farmland depends on crop mix, local prices, water rights, mineral rights, taxes, contracts, and whether the output is exported or sold domestically. Global agriculture is projected to reach $12,974 in 1725, with a compound annual growth rate of 7.0%, and is expected to grow steadily as climate change and production costs increase. According to OECD projections, global consumption and the value of agricultural and fish commodities will rise by about 13% by 2034. Investors buy farmland even when they are not farmers because they understand the value of time. When discussing water rights, we can distinguish three types: running, underground, and surface. Crop revenue for farmland investors is a passive income stream. Who bought the most farmland in 2025? Between 3 and 3.6% of private U.S. farmland belongs to foreign owners from Canada, the Netherlands, Italy, and the UK. In Australia, foreign ownership is dominated by China, the UK, Canada, and the Netherlands. Large-scale land acquisitions amounting to millions of hectares are targeted by investors from Saudi Arabia, the UAE, Qatar, Kuwait, China, and Singapore, all seeking food security. Farmlands are mainly located in East and West Africa, Southeast Asia, Eastern Europe, and South America. However, farmland investments involve risks. These include unstable environmental conditions, water scarcity, soil degradation, flooding, and landslides, as well as political instability. Another risk arises when tenant farmers fail to pay rent. Social tensions driven by cultural conflicts add further uncertainty. In Hungary, some migrants damaged private orchards and farms due to famine. Hungary has chosen to pay penalties rather than grant asylum. The European Court of Justice ordered Hungary to pay a $200 million lump sum fine, plus $1 million per day, even though the country had already received $144.17 million done in EU funds for migration management since 2015. Massive land investments by major tech-linked players carry ethical risks. Microsoft has invested in about 1,500 acres of U.S. farmland to convert conventional farms into regenerative ones, improve soil carbon, and generate carbon credits. Bill Gates owns roughly 5,000 acres of U.S. farmland and plans to acquire more. managing his holdings through LLCs rather than traditional farming operations. Larry Ellison, co-founder of Oracle, owns Farmland for automated greenhouses, transforming natural land into high-tech sensei farms. These initiatives look impressive and progressive, but why are they ethically risky for the future? They can drive land prices upward and crowd out small farmers who cannot compete, undermining local agricultural independence and raising social equity concerns. Corporate entities are likely to prioritize profit over local food needs. Farmland shifts from being a food security resource to a carbon credit asset. Tech money is introducing a new model of agricultural investment. It may open the door to more sustainable farming, but if every land belongs to a corporation, humanity risks distorting food systems and prioritizing profit. If algorithms begin deciding what crops to plant and in what quantities, who becomes responsible for a failed harvest, the farmer or the software developer? Could farmland become a resource for generating data rather than food? What if one day it becomes more profitable not to grow food at all?